What's going on, family? It's your boy Greg with Stock Gems. So what do I have for you today? Well, stock market was bloody red today. And I know a lot of you probably were ready to jump off that bridge along with your portfolio. So I'm here to provide you with some crisis prevention. We're going to go through why the stock market dropped. Where do I think the stock market is going to go? And I'm going to show you proof of why I think it's going to go in this direction. So you stick around, I'm telling you, you're going to like to hear what I got for you. So let's take a look at the overall market today. You have the Dow, the NASDAQ, the S&P 500, all down at some point in time today, but looks like Dow was the only one with a strong chin because they were able to make it back up to the green. NASDAQ and the S&P 500 both took a hurting today and they weren't able to get back up. Hopefully they could recover tomorrow and we can see some green over in those areas. So let's take a look over at the sectors. You have technology, communication, cyclical, all burning red. Then you have a mix of green over in the financial, healthcare, and industrial. And this is the reason why you want to make sure you diversify your portfolio. So had you diversified, you wouldn't be sick to your stomach on red days like these looking at your portfolio. So what caused the stock market to drop down today? Well, I did some digging, and what I found, it was all due to interest rates. In order for the economy to recover, we need to spend more money. In order to spend more money, we need to make more money. To go about doing that, one way is to increase the interest rates. Joe Biden has an infrastructure bill that he wants to put out, which will help stimulate the economy. But the Treasury Secretary put out a statement today that said in order to help pay for that, they want to increase interest rates. Investors don't really like increased interest rates because that means the more that they'll have to pay due to the interest. Essentially, that would lead to inflation. So what do? They react and they take their money out of the stock market and go put it in safe things like the bond that does not depreciate due to inflation. It's going to stay strong. It's like buying into gold. So that's why you're essentially seeing this drop. Of course, buyers get back in. They cause the market to go back up. But right now, all we see is red. So one thing I want to make sure I point out is this drop is temporary. These stocks are dropping because people are panicking. They're seeing investors are taking their money out, so they are taking their money out. And that's causing the stock price to drop down even lower. And then it becomes more attractive. The investors will come swoop back in when this price is at a low point, and they will ride this back up and leave you in the dust. Keep your money into the stocks. Maybe add more to the portfolio given that the stocks have dropped down to average your cost down. But make sure you stay into these stocks and ride this wave back up. So let's quickly go over to the Webull app and I can show you a little bit more what I'm talking about. So let's start off with QQQ. And that's the ETF that closely follows the NASDAQ. So of course, like I said before, we saw a huge drop today. And it looks like it's approaching that 50 SMA line. Now, one thing you'll notice is there's a long wick. And that's pretty much showing that there's a lot of bulls that's pushing this stock back up. Let's quickly go over to the 1 minute chart. So let's zoom out. So what you'll notice is the second the market opened, this stock started to tank. And this is all from the interest rate news. And then at the second the stock hit a certain point, you started to see some growth. And the one thing I want to quickly point out is once it hit its lows, it started to see higher lows. And that's a very good sign that we're starting to see some type of a recovery. So we hit a low, market shot up, and then saw another low, but it was higher than the previous low. And this is higher than the previous low. This low is higher than the previous low, and it kept on continuing. That's a very good sign. And I'm going to show you another quick example of that. So this is back when COVID happened. And then from there you saw a lot of higher lows. until finally there was a market correction. And then again, higher lows. And then now this is the current market correction that we're in right now. But you'll notice higher lows. This is all a good sign that the market is recovering. So it's a horrible idea to take your money out of the market, because if market is anything like the past, it will still keep on continuing to go high unless there's some ultimate news that causes the stock to go down. News on interest rate increase is not going to cause the stock to crash like back in COVID or during some of these previous corrections. We already went through a correction. So if you just hold tight, just monitor this stock, make sure that it does not have a new low, a lower low. You want to make sure that the lows stay higher. Then you can ride this stock back up. Let's quickly jump over, take a look at Tesla real quick. So again, still a lot of higher lows. We're seeing a lot of higher lows. Let's quickly, draw a trend line. Essentially, this stock has been following a path. It might be at a point where it's ready to bounce back up. Now, this is not written in stone. It can easily break through that line. But let's see where it goes. Let's monitor this stock. And let's see, does it start to reverse? Does it start to go higher? If anything, it might breach the line, but it won't necessarily crash through and keep on going down. I think it still continues to creep higher. So it's definitely something we should keep on our watch list and just see where it goes. Similar to NIO. So NIO, we'll switch over to NIO. Again, NIO has been respecting this SMA line. So it dropped down, it breached, but it still recovered. And right now it's at that point where it's starting to touch that point again, that SMA, and can essentially shoot up higher. Eventually there will be enough steam for it to break through this SMA. Right now it's just gathering up steam. Like I had mentioned in my previous video, I plan on buying an option on this stock. I already bought more shares in this stock. I'm looking for that recovery all the way back up to the $66 range. So these are some of the things that I want to show you to take your portfolio from that lump of coal to hope for that diamond. Now, if you like what you heard, please like and subscribe. Webull link is on the bottom. And like always, peace.